All right, guys, welcome back to another video here. Today we've been analyzing the US dollar currency index, which is the USDX, which is basically accounts for the US dollar. So starting off the monthly time frame, we can see that the US dollar is in a bullish, what we call a bullish trend. Price formed a pullback, a bearish candle here. However, it broke past this, came back down and tested the wick of this bearish, formed a continuation, as we can see. Now going on to the you know weekly time frame. As you can see, the weekly time frame gives us a clear picture of what really happened in terms of where is the key structure. So what we can key support. So what we can see is the key support comes from the break of structure here, following the pullback, price continuing this bullet trend, failing to break it first time and forming in what we call a bearish candle. However, the bullish buyers came in play and pushed the trend upwards, causing a new higher high from this higher low here. Obviously, we can see that because due to this high, price came down and tested this current, came pullback based on the Fibonacci, as we can see. So the Fibonacci does give us an understanding of how traders accumulate profit and take profit. So what we can see here, price came at the 23.60 ratio. By looking at the overall trend, it does give us an understanding that price did come and touch the neckline of this trade, where we saw a bearish candle here, which does show us that price came, touched this candle, and we're currently seeing upwards towards the 110 price range. So yeah, this is a perfect example of what we call a bullish trend, or what we call a bullish cycle. So uptrend, pullback correction, touch the last support, last neckline, or the break of structure price zone, form a bearish candle, and continuation of the uptrend. This is literally called a perfect bullish cycle. So yeah, moving on to the daily time frame. You can see here with daily time frame, so we can see that since price did come back to test the key support range and form continuation to the upside, we're already seeing that the current daily candle is forming a indecisive candle as it touched the highs of this wick here, showing that sellers are trying to take control. As we can see, this is the last resistance we had first, where price tested it, failed to break it, went down, tested the second time, failed to break, going all the way down here, coming back up, forming a new resistance, went down, came back up, forming what we call a double top. Now obviously, due to this being a key support range, price then buyers then came in control, pushed the price up back to this resistance zone. So what we right now we're seeing is what we call we're in a consolidation form, as this can mean that price could change direction based on our current daily structure. However, on the 4-hour, we can see that this price zone area is very, very important. Looking at the fact that price tested it first time, went down, second time failed to break it to the upside and completely dropped, gave us a bearish drop. Price came up, touched it the first time, went down, grabbed some liquidity and broke it, touched the highs of this support. Price went up, touched the highs of this trade to grab all the liquidity that was imbalance, of the wicks that need to be filled up. and obviously we saw a sharp drop to the what we call to the support range. So currently we're in a what we call a consolidation form. Due to the fact that there are other factors influencing price action. So looking at today's what we call this week's news, we can see that the US has some strong news tomorrow, which is the retail sales, and obviously the Feds have a meeting at 7 p.m. So all these stuff would influence, the current price of, as the Feds are going to be talking about, the federal fund rate, which is basically the interest rate, and other rates that are important due to obviously the current market condition of inflation at all-time high since over like a past decade or two. So yeah, we are currently in a very, very high intense, high volatile market. So therefore, trading this, day traders should be very, very careful and cautious of trading this. As you can see, we have news from 1:30 to 7, the retail sales month to month, and the federal meeting at 7 p.m. tomorrow, Wednesday. So therefore, we should be very mindful that the volatility and the volume of price would increase tomorrow, especially. So I would be mindful. I would not. If I was trading tomorrow, I would be very, very careful of trading the dollar, as we have a lot of news and there's going to be a lot of volatility in the market, causing the price to move and change directions there. So, however, in the long term, I believe that price will continue to go upside and let all that wicks that has not been filled up, grab all the liquidity on the upside before we can see any form of drop to this neckline and then continuation to the upside. So that is my take on the US dollar index. So you guys, let me know what you think in the comments. Again, tomorrow there's going to be some news coming out. There's going to be some decision made from the Feds. So therefore, we should be mindful of that when trading, day trading, especially on 1 hour, 30 minutes, 15 minutes, 5-minute time frames, and whatever so forth. So that is my update on the US dollar so far. Let me know what you guys think in the comments. Drop your suggestions, like and share, and peace.